Hi, let's talk about Virgin Galactic Holding. It's an integrated aerospace company that develops human space flight for private individuals and research in the United States. For information should not consider as investment advice. It's a company pretty much that had its peak of $60 per share and went down to $20, minus 60%. The market cap is quite big, and there is huge volumes that are made recently last trading date, and currently the trading is happening 37% below the site's estimated fair valuation. So there is actually 56% upside currently in good scenarios. 12-month forecast looking that it could even doubles, or yeah, so 2.5 could be pretty much the share price. And yeah, the revenue is also forecasted to grow hugely, 64% per year, but there's risks that a company makes less than 1 million in revenue, so currently zero. All expansions and researches are made of the shareholders' money, so that is good for company but not so good for the investors. Currently unprofitable, not forecasted to become profitable in the next 3 years. Volatile share price, significant insider selling of the past 3 months, and also one thing, shareholder have been diluted in the past year. So yeah, as we can see, for example, here they had its peak. Here we see that February 4th highest peak 62.8, then it now goes down to the 16-15 even, and currently the volumes are getting very high. So 3 days ago 93 million, and yeah, 2 days ago 50 million. So I think that hedge funds and big companies are loading this once again. So my forecast, of course, is not financial advice, but I think it could make some of the similar movement as we saw in last January and the February, mid-February. It could go somewhere around there, and yeah, at least it has price target at $32 per share, and as I said, 50 even in good scenarios. And Market Watch has pretty similar numbers to stock price target is in good scenarios 50, in bad scenarios 18. And yeah, there was some of the product updates currently that made stock pretty much up from the middle May. Yeah, 30% up currently. And if we see here, for example, from those numbers, 155, I think there is a possibility for the 50% up. Market performance, 7-day return is also almost the same as the 1-year return, 33%. Long-term price volatility considers lowest, and yeah, 90 days minus almost 60. So there is also possibility to lose the money. And yeah, Simple Wall Street shows that fair valuation of the stock would be around $33 per share. Future growth 59%. So there's the dynamic. So they could become profitable in the end of 2024. And currently the actual earnings are pretty badly down and no revenue. Yeah, so as I said, the earnings per share is forecasted to grow and they might become profitable in 2024. Past performance decreased the annual earning growth, which is not so good, but yeah, this is kind of a long-term thing. Currently, the company is unprofitable. Financial health side, yeah, the good side is that they are debt-free, and yeah, they do have a cash aid, 616 million of the cash. So there's a lot of cash. Balance sheet looks green. Ownership insiders. Let's have a look. Yeah, on the seller side, every individual in the company. Last insider sold 2 months ago at the price $37. 200 million shares. Chairman of the board. Ownership breakdown, mostly general public 43%, private companies 35%, institutions 21%, insiders less than 1%, state and government 0.01%, private companies 0.003%. Top shareholders see that they are pretty much decreasing. Okay, there's ARC investment management that have been added. Yeah, 2 months ago, last reporting holding date. And so there's action on both sides. I think this volume tells pretty much where the stock price would be going, and there's usually the advice is whenever the volumes are raising and the price is pretty much on the same level as it was last year, there is something happening. And simple safe dividends show that shares outstanding increases. Total sales are 0 last 12 months, not so good, but they had some of the, I'm not sure if this some of the large one-off items that have been sold that are affecting the financial results, or what is this, $3,780,000. Yeah, if we see max size, it's pretty stable, but there you see the spike. So be careful. Try to not invest in the numbers where it's because this is actually the company that you can invest based on fundamentals. If you like to speculate it pretty much at the safe level, which is above, less than this. I think the best entry price would be like $15 per share. And yeah, so there's one of the news that I want to read to you guys. Be careful. And let's have a look at the investing.com, summing the stock for long-term investors as neutral, for the moving average as a buy, and technical indicators as a sell. And also there was, I think, short sellers. The short sellers are going to be in a heck of the ride on Monday. I already doubled down Wednesday, and I'm gonna buy more Monday. Just push them all the way out. Right now, whole red portfolio. The only hope is Virgin Galactic these days will be bad for me, so I hope. This is actually not so good thing, because yeah, usually I try to recommend invest long term, not investing in one stock more than 1% of your portfolio, and try to mostly invest money in safe, like measure your risk taking abilities. So if your risk taking abilities allows you volatility, as it stock could go possibly down -50, -60%, then there's yeah, why not? But usually it's not going to end very well based on statistic. And here's the one news that I want to show you. More investors than ever are borrowing to buy stocks. Here's what this really means for the market. So actually total margin depth has nearly doubled since the March 2000. So yeah, there's actually, man, rising and falls in lockstep. So this is statistics from the back to 1970, and there's a correlation between the margin depth. Here's the numbers in the millions and S&P 500. So people are borrowing currently more than ever, pulling the stock market way up. So if it crashes, people are gonna lose the money if they try to sell, for example, on loss. They would have little money left, and the borrow, like the debt that they took. So this is actually very serious situation, I think. Let's have a look at the comments. Considering that half of the people on my street are now trading, whereas a year ago none of them knew what a stock was, or that I was a pro trader for 35 years. So it would surprise me if the margin amount hadn't gone through the roof. When the tech crashed in 1999, my son's principal, who had never talked to me, was now asking me to explain margin, not because she wanted to use some, but because she had lost everything and the broker wanted more money. How many other people are in that situation right now with absolutely no clue how it works? So yeah, this is actually the thing that stop. First of all, if you got the borrowed money or debt, try to close the debt and then invest with the money that you can lose. You can afford to lose, because the money you don't need in the moment, because stock market, as we can see, is pretty volatile. So if you invest, for example, January, and it goes up, you're willing to make like X10, you didn't make, it goes down, and in a March you are on the minus side. Okay, then you're gonna wait for more. Okay, it's you're on the plus side, plus like 5%, and now you're thinking that it could go plus 50, then it goes back down. You become back holding, and you just wait, and it continue to drop. Then the money that you invested, you're gonna need for some of the needs. And many of the people uh, sell, like even they are minus 50, they try to sell, they lose money. And if they borrowed the money, for example, you borrowed 1,000, you bring it to the stock market, the shares that you bought on the 1,000, after a few months, looks like your capital is 500. So it made minus 50%. And if you then need the money, you either wait or borrow more or sell at the loss. So you have the pretty bad situation. So be careful. Try to avoid that your money is in others' pocket. Everyone using the Robinhood app and similar apps are likely in the same situation. Leverage is a good tool if you're based on if you invest in based on fundamental analysis of the specific stock, it can lead to the positive return. If your analyst is Reddit project posting GameStop and being part of the herd, then it will likely end in financial tragedy. So yeah, there's borrowing money to bet in the casino is insane. The odds are with the mouse house, the market movers and algorithmic gambles, while the rest of us take calculated risk. It might be better to break it down to people who invest in more speculative investments, including growth stock, possibly add stocks with high PE ratios, etc. There is a difference in borrowing to buy stocks that have low volatility and offer higher dividends. Change your graph to reflect those parameters and see the difference. Never borrow to buy stocks, never. So yeah, I agree with David. That's not investing, more like speculation. Other things equal, borrowing money to buy stocks is for anyone without terminal disease. I plan to get some leverage myself. Once the speculative everything bubble bursts, it will buy decent stocks for cents and on the dollar. Yeah. So those who know the how it works, they pretty much, if they borrow, they know what they are doing, and yeah, but there's still risky to borrow money for the investments. If I hold 10k in real stocks and I decide to trade it on the margin with deposit of 25%, I can sell the stock, buy it as a CFD or spread bet, and put the 7.5k feed up to do something else with. If I have fully researched the stock and have decent amount to cover any falls in the account to not get stopped out immediately, it's the yeah. So this actually this actually good thing is if you know how to risk manage your investments. And let's have a, if the interest rate at the home is 2.275, its return is more. Why wouldn't it make sense? Because with the mortgage, the exact opportunity cost is no. When buying on the margin, the potential loss is unlimited. And we do have, yeah, when Jim Carrey said some people were leveraged 100 to 1 buying Bitcoin recently, I cannot help thinking that when they get hit with margin calls, they will be forced to sell some stocks within, will spill over the stock market soon. Then will be margin calls. Yeah, so this is actually the situation that had been in the last year's March. So there were margin calls. Those who entered with the margin ended very badly. Invested on borrowed funds is almost always a sucker bet. I remember how things went for the stock market March 2002. It wasn't good for the bulls. That doesn't mean we're at the top yet, but we're getting close, I believe. Yeah, actually that is very serious situation. So the point is to avoid gambling and to try to invest in high quality stocks based on S&P 500. Thanks for watching this video, subscribe to the channel, like the video, and see you in the future one.